All right, so we're diving into Bitcoin again.
Oh, good.
You sent us this analysis, right, from this crypto commentator, and
Yeah.
it's pretty interesting stuff, especially since, well, he recorded this on the last day of September.
Oh, September.
Yeah, September 2024 to be exact.
Hmm.
And as we know, September for Bitcoin, it's historically been a bit of a, well,
Not really October is.
exactly, not exactly known for those massive gains, right?
Yeah.
But what makes this whole thing interesting, this deep dive, I mean, is that this commentator is, well, he's straight up bullish.
Really?
Yeah, even with, history kind of looking over his shoulder. You know what I mean?
Yeah, I getcha.
He even mentions that Bitcoin's up 9% this September. So that's what we want to unpack, right? Like what's his reasoning here? What's he seeing that maybe we're not?
Well, to be fair to him, he does address those historical trends right off the bat.
Okay.
He's not shying away from that September slump, and he actually links it to the Federal Reserve,
Oh, really?
Yeah, he's saying they often raise interest rates around this time of year.
Which, yeah, that can definitely spook the markets a bit.
Exactly, that whole sell in May and go away kind of thinking.
Right.
But then, and this is where it gets interesting, he throws in this curveball.
Okay, I like curveball.
He connects a dip in the market on that specific day, September 30th, not to the Fed, but to something happening over in Japan.
Japan? Like the yen or something?
Not even, well, not directly at least. He's talking about their stock market, the Nikkei. It tanked that day, like a 5% drop.
Wow. And he's linking that to Bitcoin's price.
He is, yeah. He uses it as this example of how interconnected everything is.
It's true. What happens on Wall Street rarely stays on Wall Street these days.
Exactly. And he emphasizes that, political stuff, even in a country like Japan, can ripple through the entire system. And yeah, that includes crypto.
Bitcoin doesn't exist in a vacuum, that's for sure.
Mm.
But it sounds like he's building a case here.
Yeah, it's like he's laying the groundwork. And then he shifts gears, starts talking about this potential for, get this, massive liquidity injection.
Liquidity injection. Okay, hold on. Before we go any further, I got to ask.
Yeah.
Can we break down that term for a second? I mean, it makes sense, but it sounds a little jargony,
Sure. Think of it this way. The economy, right? It's like a swimming pool.
Okay, I'm with you.
Now, when governments inject liquidity, it's like they're taking a fire hose and just aiming it right into that pool.
So there's suddenly a whole lot more water, or in this case, cash, flowing around.
Precisely. And that cash, it's got to go somewhere, right?
Right. It's not just going to sit there.
Exactly. It's going to find its way into assets, stocks, bonds, even things like real estate and, well, Bitcoin.
And our commentator here, he's saying Bitcoin is about to get soaked.
He's pretty much betting on it. He points to both China and the U.S. as like the main players in this whole thing.
So he's saying this is a global wave, not just a U.S. thing.
Yeah, he actually suggests that China might be ahead of the curve on this one.
Interesting.
He points to their stock market, which has been, on a bit of a tear recently.
I'd say so, yeah.
And he sees that as a potential sign of things to come, globally.
Okay.
But then he turns his attention to the U.S., and this is where he makes a pretty bold prediction about interest rates.
So he's saying the U.S. is about to, turn on their own fire hose, like you said?
Pretty much, yeah.
Yeah.
He predicts some aggressive interest rate cuts, maybe even a full percentage point or more by the end of the year.
Wow, that's a lot. And he's calling this quantitative easing, right?
He is, yeah. Which, as we know, can be a pretty powerful tool for better or worse.
That's an understatement.
Right. But here's the thing. A lot of people might think, okay, economy's shaky. People will flock to traditional safe havens.
Like gold, bonds, that sort of thing.
Exactly. But this commentator, he's got a different take on it.
Okay, I'm listening.
He's saying this flood of liquidity, combined with the fact that, fiat currency, it's losing value thanks to inflation.
Right. Can't argue with that.
It's going to push people towards assets like Bitcoin.
So not so much a safe haven, but a hedge against, everything else going haywire.
Exactly. He argues that Bitcoin, fixed supply, decentralized, it becomes a more attractive option when traditional currencies are, looking less appealing.
Okay, I see what he's saying.
Yeah.
But I got to say, even if all this liquidity does flood the market like he's predicting, isn't this still a risky move? Bitcoin is volatile, to say the least.
Absolutely, and he acknowledges that. But, and this is where his argument gets even more interesting, he brings up this idea of, he calls it October.
October, I like it. So basically he's saying October is historically good for Bitcoin.
Right. He even pulls out some technical analysis, points to what he calls a giant C and handle pattern in the charts.
Hold on. October I get, but sea and handle sounds like we're suddenly talking about, I don't know, ancient pottery or something.
Not quite, no. Think of technical analysis as, well, it's all about patterns, right? Like looking for fingerprints. But in Bitcoin's price history
Yeah.
and the see and handle thing, it's a specific pattern some traders look for, and they believe it can signal a price surge.
So like a bull flag.
Exactly. So he's seeing this potential bull flag, he's got history on his side, and he's convinced all this new liquidity is about to enter the market. You can see where he's going with this, right?
Yeah. He's painting a pretty optimistic picture. But just how optimistic are we talking?
Let's just say he's not afraid to make a bold prediction. He actually pulls out this tool, calls it a rainbow chart, and according to this chart, Bitcoin could hit, get this, $1 million or more by 2029.
Okay, now we're talking life-changing money. $1 million a coin. That's something else. But what's his reasoning for such a, well, let's face it, outlandish prediction?
He's banking on institutional adoption big time. Thinks major players, think BlackRock, are going to dive in headfirst and start scooping up a huge chunk of the Bitcoin supply.
Which is limited, of course, basic supply and demand, right? Less Bitcoin available, more big players wanting in, price skyrockets.
Exactly. He's arguing that as more institutions start treating Bitcoin as a legitimate asset class, well, the price is going to reflect that. He even brings up the 2020 bull run as an example.
Oh, yeah. The year Bitcoin went mainstream, everyone was talking about it, it seemed like. And the price, I mean, it went from, what, around $10,000 to almost $70,000 in a matter of months.
And he's drawing a parallel between that rally and what he thinks is coming. Thinks we're on the verge of another parabolic move, maybe even bigger than before.
Okay, I have to jump in here. I mean, this is all well and good. October, $1 million Bitcoin, it's exciting stuff. But there has to be another side to the story, right?
You're absolutely right. And to be fair, he does mention some cautionary points.
Right, because it can't all be sunshine and rainbows, can it?
All right.
Even if this October thing is legit, even if institutions do pile in, there's got to be some risk involved.
Absolutely. And he does say, he reminds everyone that those parabolic runs, they're often followed by, well, corrections, big ones.
Right. What goes up must come down, as they say. And in the world of crypto, that down can be pretty darn quick.
Exactly. He actually uses an example from that 2020 bull run we were talking about.
Oh, yeah.
Yeah, he points out that Bitcoin during that crazy climb, it actually plunged from like $40,000 down to $28,000.
Ouch. That's, what, almost a 30% drop? That's gotta hurt.
Yeah, and it happened pretty fast, too. So his point is, even if October lives up to the hype, don't be surprised if it feels more like a roller coaster than a straight shot to the moon.
More like a roller coaster, huh? I can definitely see that. So even with all this potential upside he's laying out, the liquidity, the institutions, he's still saying, don't go all in.
That's the gist of it, yeah. He's advocating for a cautious approach, acknowledge the risks, understand what you're getting into, that kind of thing.
It's like he's saying, here's the treasure map, but watch out for those booby traps.
Exactly. Use the information, but don't be reckless,
Which is, well, that's kind of the whole point of these deep dives, isn't it?
Right. We're not giving financial advice here.
Definitely not. But we are trying to equip our listeners with the information they need to make their own decisions.
Exactly. It's like we're all putting together this giant puzzle, right? And we've got all these different pieces, historical data, these technical indicators, what's happening in the global economy. And yeah, even a bit of speculation.
And each person's got to decide how those pieces fit together, if they even fit together at all.
Right, and whether it's a picture they're comfortable with.
And that comfort level, well, that depends on a lot, right?
Yeah.
Your risk tolerance, your investment goals, even just how much you understand about Bitcoin, about crypto in general.
For sure. I mean, someone new to this whole thing, they might hear $1 million Bitcoin and get really excited,
Yeah,
right?
I could see that.
But someone who's been around the block a few times, they might hear the same thing and think, okay, time to be extra careful.
Right? Because they've seen these cycles before. They know how volatile things can get.
Exactly. It all comes back to, well, the saying, don't put all your eggs in one basket.
Especially not when that basket is, well, Bitcoin.
Right. And even if you're feeling bullish, even if you think this commentator is spot on, it's still a good idea to diversify.
Absolutely. Don't put all your crypto in one project either. This isn't just about Bitcoin, right?
Right. There's a whole universe of projects out there, all with different use cases, different levels of risk.
It's like we've just dipped our toes into this vast ocean, this whole new world of finance.
And there's so much more to explore. That's what makes it so exciting.
It's exciting, it's a little daunting, and honestly, it's constantly changing, which I kind of like.
It keeps you on your toes, that's for sure.
Well, unfortunately, we got to start wrapping up this deep dive. But I hope we've given our listeners some things to think about, maybe some new avenues to explore.
Yeah, and remember, the conversation doesn't end here. Keep learning, keep asking questions, and most importantly, don't be afraid to dive a little deeper yourself.
Well said. Until next time, happy exploring, everyone.